Welcome back to TechKidFX for another Agix price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Agix chart, which at the time of this recording is trying to battle out the 20-day MA, which is now acting as resistance. And we have also fully maximized our target areas to the lower side in the formation of this wave 5, and soon I'm expecting a massive bounce to the upside in the formation of this wave 5 to the upper side. And before I give you my next price targets here on the Agix chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that from these low prices that we had been trading within, we saw massive bounce to the upside in what I'm terming as that first wave to the upside, giving us a peak at around the $0.13492 mark. And after seeing the formation of that first wave, we started this corrective structure in the formation of that wave 2, then started another massive bounce to the upside, giving us the high for that wave 3 at around the $0.657 mark in the formation of that wave 3. And after seeing the high for that wave 3, we expected a corrective structure in the formation of that wave 4. And in the formation of this wave 3, we also expected to see a 5-wave structure in formation because of the impulsive nature in the formation of that wave 3, which we are seeing right here in yellow, having the wave 5 fully maximizing our target areas to the upside in the formation of that wave 3. And after seeing the formation of that wave 3, we can now be able to sketch out a minimum retracement area in the formation of that wave 4 by connecting the Fibonacci's from the low of the second wave to the high of that wave 1. And that gives me a minimum retracement area between the Fib level 0.382 and the Fib level 0.5, which lies between the $0.43308 mark and the $0.35739 mark. And it is within this yellow target area that I was expecting to see the low for that fourth wave to the lower side, which is a target area that we have now fully maximized. And there are chances that soon we are going to continue pushing even higher to fully maximize our target areas to the upside in the formation of this wave 5. And in the formation of that wave 5, for it to play out, there are key moves that I'm also expecting to play out over here. And the very first one is a break above the 20-day MA for us to have the support that we need for us to continue pushing even higher. And once we break above the 20-day MA, then I'll be watching the wave 3 high at around the $0.657 mark. And the moment we manage to break above the wave 3 high, then that will be enough confirmation that whatever we are seeing over here is that massive bounce to the upside in the formation of that wave 5. And in the formation of the wave 5, which is an impulsive wave, we also expect to see a 5-wave structure in formation, having the wave 5 of the fractal wave fully maximizing our target areas to the upside in the formation of that wave 5. And I believe we are seeing such a movement over here, where you can see that after making our low in the formation of this wave 4 right here, we started this bounce to the upside, making the peak for that first wave to the upside. Then we are seeing this corrective structure in the formation of this wave 2. Then we can expect a wave 3, then a wave 4, and then push even higher in the formation of that wave 5, and getting to see whether the second wave right here has done the minimum that we expect a wave 2 to the lower side to do by connecting the Fibonacci's from the low of the first wave to the high of that wave 1. That gives me a minimum retracement area in the formation of that wave 2 between the Fib level 0.5 and the Fib level 0.618, and I can mark that target area here on the charts like that, which is a target area that we have fully maximized. And after seeing a reaction of the Fib level 0.618, we are seeing a bit of a bounce to the upside in what could be the start of a pump to the upside in the formation of this wave 3 right here in yellow, and sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the Fib level 1.618, and that is at around the $0.6673 mark. So the moment we manage to break above the 20-day MA and also manage to break above a high that we made at around the $0.5 mark, then those two moves could trigger another explosive move to the upside, having my next target area at around the $0.6673 mark. And once we fully maximize the formation of that wave 3, then we can expect a wave 4, and then push even higher in the formation of that wave 5 to fully maximize our target areas to the upside in the formation of these larger Elliot wave count 5 right here in red, and also sketching out a minimum target area to the upside that we can expect on the long-term scenarios in the formation of that wave 5 by connecting the trend-based Fibonacci from the low of the first wave down there to the high of that wave 1, then dragging the fibs to the high of that wave 3. That that gives me a minimum target area to the upside in the formation of that wave 5 at the fib level 1.618, and that is at around the $0.83003 mark, and that is the minimum that I'm expecting that wave 5 to the upside to do on the long-term scenarios, and also expect that 5-wave structure to the upside to also play out. So continue watching the 20-day MA, also watch the high at around the $0.5 mark, and also the high in that wave 3 at around the $0.657 mark. And the moment we manage to break above those significant highs, then that will be enough confirmation that whatever we are seeing is the start of that massive bounce to the upside in the formation of that wave 5. And also taking a look at the indicators here on the RSI, we are trading at around the 43 mark, meaning we have massive room for us to fully support higher prices in the formation of that wave 3. Also taking a look at the MACD, we had been able to print a bearish crossover here, meaning there are chances of seeing a bit of a short-term bearish movement before we can continue pushing even higher, fully maximizing our target areas in the formation of that wave 3. And let's be patient and see how that plays out, and I'll be keeping you updated.